All right, what's up, guys? It's Amir here, and today we're gonna go over the 8 EMA trend continuation model. And today we're gonna talk about how you can find easy setups with this model, and you could be in and out within a minute, even less time than that, or maybe like max 5 minutes. But for my people that do want to get in and out with trades, they don't feel like waiting hours and hours for this trade to play out just to see it just lose or just to see it win. With the 8 EMA trend continuation model, you're able to find easy setups, yet very effective, and then also use that to your advantage to be extremely profitable long term. So in this video, I'll be going over how to find these setups, and you'll be able to understand exactly how to do that once this video is over. So in order to do that, we're gonna stay with the 1 minute time frame through the 5 minute time frame. So 1 minute, 3 minute, or 5 minute. And there's a couple steps that we want to go through in order to actually find an entry. It's two very simple steps. The first thing that we want is, in short terms, is if we're going bullish, we want higher highs and higher lows over this 8 EMA to confirm the trend. And then we want a confirmed rejection candle off this 8 EMA to signify that the trend is still being respected in that direction. So that's two very simple steps. And then as soon as that's met, then you're able to identify the trend, identify respect for the trend, and then easily identify a setup to get into and then profit from there. So as we know, the model itself is called the 8 EMA trend continuation model. We're going to have the 8 EMA, which is this small little line right here. And all you would do is just simply go to indicator and then search up EMA. And then you'll go to moving average exponential. This is on TradingView. And then you'll add it. And then it'll automatically be set to 9. And then all you'll do is just go into, you'll double click it or double tap it. And then once you do that, you'll just simply just set the length to 8 and then just press OK from there. And then it'll automatically set to 8. And then that's all you have to touch. You don't have to touch anything else. If this source isn't set to close, then set it to close. But other than that, nothing else needs to be touched. Just make sure that this is at close and then this is at 8. But yes, first thing of the model is 8 EMA, which will be this small little line. That's the only thing that you need. Trend continuation, we're going to be trading with the trend. We're not looking for reversals. We're only looking for pullbacks. We're not looking for reversals. And then model is the 8 EMA trend continuation model. This is the whole entire concept of the actual trades that we're taking. So we're going to go ahead and use this for as a good example. So we're on the 1 minute. And since we see that price is going to the upside and we see that higher highs and higher lows are being formed over this 8 EMA. So we have higher high, higher low, higher high, higher low. We had a break through the 8 EMA here, but still came back over. Another break here, but still came back over. Higher high, higher low, higher high, higher low. And then it continues to go to the upside. But you see it's a higher high and higher low that are being formed over the 8 EMA or near this 8 EMA. And what we want is for price to make those higher highs and higher lows over the 8 EMA to signify a strong bullish trend going to the upside. And the second thing is we use these pullbacks to actually get into a trade. So price comes to this 8 EMA. We can use this. We've already had plenty of confirmed rejections prior to this. We had a rejection here, rejection here, rejection here. And then we have numerous rejections here. And let's say that we get in on this rejection. Say that we target 75 ticks here. And then we have 75 ticks as a stop loss. And then 75 ticks as a take profit. Or if you're a 1 to 1.5 trader, 75 to 115 or 112 or 113. Or 75 to 150 if you're a 1 to 2 risk to reward ratio trader, just depending on what type of risk to reward you like. But typically, whenever you're on the lower time frames, you need to risk. Your risk needs to be tighter versus if you're on the higher time frames. The 1 minute time frame, I'm going to be risking less with less wiggle room versus if I'm going with the 5 minute. If I'm on the 5 minute, then I might risk 150 ticks both ways, or 150 and then 225 with the take profit. If I'm on a 15 minute, I might have 250 going both ways. But depending on the time frame, the volatility, generally speaking, your risk and reward will be less with the lower time frames. And then as you gradually progress to the higher time frames, a higher and higher time frame, it'll be much more room to risk. But since it is the lower time frame, which is the 1 minute, we're only looking at 30 ticks per candle, or if that, on these other candles we're looking at a max of 15 ticks of movement, right? So if we have, let's just say that we did take that position right here, we decide to get in, and this is miraculously whenever we get in, that's whenever price breaks through that 8 EMA. But to say that we get in with 75 ticks here and then 75 ticks here, we'll have it to where it takes 21, 22, and then 23 minutes to play out, which isn't bad. A lot of people take 2 hours and 23 minutes to actually play out in a trade. But this is assuming that as soon as we get into this trade, price breaks through the 8 EMA and then continues back to the upside after it rejects off of this, which I would assume 5 minute, because thing is, once it does break this 8 EMA, we still have cushion with these other time frames. So we're on December 15th at 3:02 a.m. If you go to the 5 minute, let's go back to December 15th at 3:02 a.m. And this is 3 o'clock right here. So it ended up coming to the 8 EMA and then rejecting off the 8 EMA right here, making a hammer candle to signify that the trend is still strong bullish, but it ended up breaking through on the 1 minute. But it's fine because our stop loss was still under this 8 EMA on the 5 minute to give us enough cushion on the 1 minute as well, since it broke through on the 1 minute, but it rejected off of this 5 minute. So that's just a really good example of, even though it breaks through on that 1 minute, as soon as we get in, it breaks through on the 1 minute, it still rejects off this 5 minute and then continues to the upside. And then with that being said, we still ended up getting out in 25 minutes almost. So very quick trade. And then, for instance, if you are fortunate enough to find the perfect trade, which plenty of times you can find a very good setup depending on how market is moving at that point. Plenty of times where you'll have movement to this downside. You have a breakthrough on the 8 EMA. We have 4 rejections off this 8 EMA right here. And then you decide to get in off of this 5 minute candle. But even if you target, let's just say 100 ticks on this 5 minute, because even if you target 150, like I said, you'll still hit this trade. It'll just take a little bit longer right here. You would have still hit this trade. But let's just say 100 ticks. As soon as you get in right here, price immediately shoots down, and then you're out within 10 to 15 minutes. Well, you're out within 10 minutes because price comes down here and then hit the take profit. Depending on if you just let the trade close, if you let the EMA reject and then a close right here to really create this shooting star right here, or if you just simply just let it tap that 8 EMA and then you get in right here, either way you would have been out this trade in 10 minutes or less. So and that's in between 5 to 10 minutes, because this candle is 5 and then this candle is 10, but depending on how long it took for this 5 minute candle to actually go to this area. So very, very quick trades. It'll be plenty of times if market is extremely volatile. If we're talking about, just go ahead and zoom out. This isn't tradable. You don't want to see this. If you see something like this where there's consolidation, then you don't trade that. But let's just go to a New York session, which that's where it'll be extremely volatile. So let's just go right here. Boom. We have easy trades to get into right here. Prices fall into this downside, and we have lower highs and lower lows forming under this 8 EMA, signaling a strong bearish trend going to this downside. And it's extremely volatile. And let's just say that we're getting in with 150 ticks. So we end up hopping on. We let price let price form, and then we have the lower highs and lower lows, and then we let price come down here, and then we say that, okay, once price does one more rejection off this 8 EMA, then we're gonna get in bearish, because we have our 2 steps. We have our 2 rules. First, we want to see lower highs and lower lows being formed. That's been formed. And then the second thing, we want to see rejections off this 8 EMA to indicate that price is still being respected on this 8 EMA. So the two qualifications has been met. So all we need is for price to actually reach this 8 EMA. And then once it does that, then we'll be able to get into a trade. And then boom, we have another shooting star candle form right here. And then once price closes, we decide to get into a short position, and then we target 150 ticks. And then once that happens, then we're out of the trade. And as we can see here, if we put 150 ticks both ways, let's just say 100 ticks, it doesn't really matter here since either way we would have hit the trade. So 100 ticks here and 150 ticks, a 1 to 1.5 risk to reward ratio trade. And we get in right here. And then as soon as we get in, price shoots down. And then let's go to the 1 minute to see how long that took exactly. So we're on a 1 minute now. We'll see that it took 1 minute and then it took 2 minutes. So we would have been out of that trade in 2 minutes and call it a day from there. Or you could have easily just found more trades to trade with on this 5 minute, because price was just going one way, making it super easy for us to find entries, and then getting on these rejections, and then continue to ride the wave for the trend to take profit. So very good examples of, even if price doesn't go your way initially, you're still out within less than 30 minutes, assuming that you're trading on these lower time frames, the 1 minute, 3 minute, and 5 minute. But if price is going your way initially, like in assuming that price is going your way instantly, or just it comes to the 8 EMA again and then just simply rejects off of it because it's been going in this direction the whole entire day or for the whole entire trend, then you'll be out within max 5 minutes. And that was a great example of you being out in 2 minutes. But yeah, with the 8 EMA trend continuation model, it's super easy to find setups, and it's super easy to have them play out very quickly. If you're on these lower time frames, you can use it on the 1 hour, the 4 hour time frame. It doesn't matter which time frame you use it on, but just know that you will be in trades for much, much longer, just considering that you need to give yourself room for these candles to actually play out. So if you're trying to have trades play out super quickly in less than 5 minutes, then use the 8 EMA trend continuation model. Super easy to understand. Go ahead and practice it. And if you want to get coaching with this and accelerate your learning whenever it comes to this, go ahead and click the link in the description. I offer coaching. You can get free 7-day access. Just click the link in my bio, and then I'll help you accelerate learning and hands-on learning with my strategy.